guys, welcome to another video of Nifty 50 5-minute time frame review. So let's begin. The first bar was a huge gap open bar, but then it was a doji bear bar. Why do I call it doji? It has a huge tail on the bottom. The second bar reversed up. So this is trading range behavior. Price tried to go lower and now it's going higher. So confusion. You find short setups on the top third region of the trading range. Now you got such a setup here. So you can go short one tick below this bar's low, put your stop loss here or on the day's high, and hope for a scalp down. If you didn't exit here, it gave you one more opportunity to exit the previous levels. Now if you see, we got a strong breakout below the EMA, but it's also testing yesterday's close and we are now below the yesterday's high. So what can you do here? Of course, this is a strong bear leg, so you are expecting a leg down. You got your leg down. The bears try to take the price lower once, and this is the second attempt. So this is a L2 short. Also, it is testing EMA. This is a high probability short. You can go short one tick below this bar slow, put your stop loss here and hope for a scalp down. Why a scalp down? You have entered the yesterday's range, so it's better to scalp out. Okay, now what's happening? This was the first push lower, second push lower, third push lower. Also, price is behaving climatically. So this is a wedge bottom. You can go long one tick above this bar's high, put your stop loss here and hope for a scalp up, or wait for a test of EMA and then exit. But now, instead of just reversing down and giving a major reversal attempt, we got a strong breakout above the EMA. Price sustained above the EMA for a long period, and we got a H2 buy here. If you don't want to take this trade because this is in a tight trading range, it's okay to wait for a breakout of this tight trading range, which we got here, and go long one tick above this bar and hope for a measure more high. Why a measure more high? You would exit somewhere here. Okay, why is this a measure move target rather than a scalp target? Is because trend till 21 bars has been bearish in nature. Yes, it has been climactic wedge. So now this is a strong reversal and pullback of that strong reversal attempt. So we are expecting leg 1, pullback, leg 2. If you don't want to mark this as the measure move target, you can do something like this. Maybe take this as the leg 1. This was the pullback's lowest point and you would have exited somewhere here. If you miss this entry, you got one more H to set up here. Buy here, put your stop loss here. Why can't you put it here? You can, but I wouldn't recommend you do that. It's better to put at the pivot low. Since the bar is not testing the EMA, it's better to put at the pivot low. You got your swing up again. Okay, now what is happening? Price try to go lower once, twice, and this is the third attempt. So this is somewhat a wedge stop. Also, this was an overshoot, and then we got a reversal. If you don't want to short this small doji bear bar, it's fine, which is also an inside bar. You can wait for a strong closing bear bar. We got it here. You can go short one tick below this bar's low, put your stop loss one tick above the bar's high, and hope for a scalp down to the test of EMA. Why test of EMA or 1:1 risk to reward? It's because the major trend has been bullish in nature. Here also I gave you the same reasoning. It's better to scalp out for a test of EMA or 1:1 risk to reward. Why? Because the major trend, although climactic, has been bearish in nature. So you're expecting prices to go lower unless it shows you that it can reverse strongly. Here it did, and it sustained above the EMA, and then it gave you a pullback structure. Okay guys, that's it for the day. Thank you.